All right, so we'll get started here. This is going to be like a four-part series. This is part 3. So far, we've covered cluster charts, footprint charts, how to look for setups, and then we did part 2, which was on confirmations. And now we're going to be doing part 3, which is on order placement, trailing stop loss, which I don't agree with, but Trader Dale covers it. And then warning signals and placement and trade maintenance. So this should take, depending on how quickly we go, I'm going to be watching these on 1.5 speed. If it's too fast for you, you can always replay it on YouTube and slow it down. Like you can slow down the replay. But for me, Trader Dale talks kind of slow. And basically, if we watch it at the time that he has, this would take at least 1.5 hours. The way we're going to be doing it, we should be done anywhere between an hour to like 1.5 hours, depending on how many questions there are as we're going. Anyway, let's get started.
Hello, this video is going to be about stop loss placement using the order flow. There are 3 ways how you can place your stop loss. First way is a standard fixed stop loss, meaning, for example...
Sorry, I forgot to mention, if you guys have questions, basically between every video, like I'll pause and see if there's questions. People can unmute their mics, ask questions at that time, or, feel free to type your questions during the video.
Example 10 pips stop loss. For every trade it is the same, and this is the easiest method. Then you can also place your stop loss in high or low of support and resistance area. I'll show you some examples later. And also you can place your stop loss in low volume area. So for example, if you went short from this volume node, then the stop loss for you would be somewhere in here, low volume area. All right. Now for this method, for the third and for the second, I use 30-minute chart with volume cell content, so the chart will look like this, those shades of gray. All right, that's the volume cell content. Now the reasoning behind placing stop loss in a low volume area is that high volume area should work as a support or resistance zone. So this area should work as a support or resistance zone. In this case, we expect selling reaction like this, so it should work as a resistance zone. And if the price goes past this heavy volume area, this is the heavy volume area, then the resistance failed, and you don't really want to be in that short trade anymore because the resistance has failed when the price goes past it, all right, past this area. So that's why you want to place your stop loss in a low volume area behind those heavy volume areas, which work as a support or resistance zones, all right? So that's the logic. Let's now jump into some examples so it's more clear. So imagine this double node is your resistance. You want to see a reaction like this. And stop loss in this case would be in here. You would place it above this area where the double node got created, all right? So this would be the ideal place for take your stop loss. That is if you, of course, didn't use the fixed stop loss, all right? Now in here, imagine you have a support at this level based on this significant volume cluster. So you expect a buying reaction from there. Now this whole area has the low in here. So one tick below it, this should be the stop loss. This is the area I'm interested in, this little rotation, all right? This is the low of this rotation area, and that's why I place the stop loss there. In this example, this is a strong support. So when there is a pullback, you expect a buying reaction. And in this case, this is the low of the swing point. So the ideal place for the stop loss would be in here, low of this area, all right? Now, this is a very similar scenario. Imagine long level from here. You expect a buying reaction from those massive volumes. The ideal stop loss in here would be below the low of this area, so it would be in here. Now, another very similar scenario. Heavy volume area is in here. The most significant volume node is those 1015 contracts. So imagine that you have a long level there. Imagine that you want to go long from there. And the ideal stop loss in this case would be in here, below this low of this area. Now, obviously, this is intraday trading. So if, for example, the wick of this candle was too much, then you wouldn't really want to place your stop loss that far from the entry point. So in case like that, it would be best to place your stop loss in low volume area. So for example, in here, this is low volume area, or you could also use the fixed stop loss. So you could, for example, use 10 pip stop loss, which should be somewhere in here, right? Because for intraday trading, you don't want to have the stop loss too wide. Now imagine you have a short level from this double node. The stop loss in this case would be either one tick above the high of this area, this whole area. So this would be the stop loss, or you can also use the fixed stop loss, which would probably be a little bit wider because this is actually pretty tight stop loss. This is just 7 ticks on the euro futures, which is a bit tight for this trading instrument. All right, so in this case, or in case like that, you may want to consider using a fixed stop loss, for example, 10 ticks, which would be somewhere in here. Now, in this case, it is pretty simple. Significant volume area, support in here, this high volume node. You want to go long from there, and the ideal stop loss, in my opinion, would be in here, below the low of this area. In this example, there's a double node, which means support. So you want to see a buying reaction from it. And the stop loss in this case could either be one tick below the low of this area, so in here, or if this is too tight for you, because it would probably be too tight for me. So in this case, I would probably use a fixed stop loss. So if it was 10 ticks, then it would be in here. All right, because this would just be too tight stop loss. Now, I must say that this is sort of a matter of preference. There are a lot of people, a lot of order flow traders who prefer to use very tight stop losses and who expect exact reaction to the level, and they use a high risk reward ratio. So they try to catch a trade with a very tight stop loss and then take a huge profit from it. What I personally prefer is trading around risk reward ratio 1, which means that I risk more or less the same amount of money as I get when I take a profit. So this is a matter of preference. If you prefer tight stop losses and big take profits, you can as well place your stop loss in here, just a few ticks below your entry point. Now in here, there is a significant double node in here. So this would be a support. You would expect a buying reaction from there. And the stop loss in this case would be in here, below the low of this area. This is the low of the area. That's 7 ticks. If it is not enough for you, then you can also use a fixed stop loss. For example, 10 ticks, which would be in here. Now, in this case, there was a strong downtrend. And within that downtrend, 2 significant high volume nodes, also pretty massive volumes in here. So this could work as a resistance. I would expect a selling reaction from it. And the stop loss for this trade would be either at the top of this swing point of this reaction, of this area. So it would be in here. In this case, it would be 7 ticks. And if this isn't enough for you, then you can also go for the fixed stop loss and have the stop loss set, for example, in here. Now, another example, strong rejection of higher prices and heavy volumes created within that rejection with the high volume node in here. So this is the resistance. I would expect a selling reaction from it. Now, if you like to use tight stop loss, then this would be the best place for you to place the stop loss. This is 7 ticks from the entry point. And if this is not enough, you can as well use the fixed stop loss. For example, 10 ticks. I personally would prefer to have the stop loss in here. This would be a bit tight for me. Now in here, there is a strong resistance. Those high volume nodes. So I would expect a selling reaction from there. The stop loss in this case, ideally at the top of this area. So this would be the stop loss. And in this case, it's 7 ticks. Now in here, strong resistance, high volume node there. Imagine the price hit the level. And the ideal stop loss in this case would definitely not be in here, at least not for me, because this would be crazy tight. So in a situation like this, when the stop loss would be really too tight, you definitely want to use the fixed stop loss, which could, for example, be the 10 ticks somewhere in here. But this would definitely be too tight. Now in here, this is a strong support. My long level would be in here, based on the high volume node, and the stop loss in low volumes, which would be in here. The price should react to those heavy volumes. If it doesn't, if it gets lower into the area where the volumes are not so heavy, then I don't really want to trade there, so I would place a stop loss in here. Or maybe below this reaction, so 1 tick lower in here. Last example, this high volume node is a resistance created in a downtrend. This was pretty quick. Pullback and short from there. And the ideal stop loss, a volume-based stop loss, would be in low volume area. So it would be in here. It would be pretty tight. So if you're not into taking such tight stop losses, then you can as well use the fixed stop loss, which could be, for example, somewhere in here. So you have some room for trade management and to let the trade breathe. All right. Now let's go into the next part of this presentation. In this part, I'll be talking about quitting a bad trade when you realize that you are in a bad position, you want to quit it. So how to quit a bad trade. This is sort of advanced stuff. You don't need to do that. I have sort of mixed experience with this. Sometimes you can really avoid bad trades really nicely with it. And in some cases, unfortunately, you miss potential winners because you just jump out of the trade too soon. So this is advanced technique. You don't need to use this one if you don't feel sure about using it, all right? So when you want to quit a bad trade, when there's no reaction to your trading level, no reaction at all, the price just shoots past it.
Between videos, there'll be a chance.
There is that pressure which goes against your level, buying or selling pressure, and the price shoots past your level and the pressure continues. So if you look at the picture, price goes downwards. Imagine that there is a support. You entered along from there, but there's no reaction. There are selling imbalances. Delta negative. The next footprint delta is also negative. You have big numbers on bid, which means aggressive sellers pushing the price downwards, heavy volumes below your entry point. This doesn't look good. So what you want to do when you identify a bad situation like this, you want to quit at break even at the place where you entered. So when there's a pullback, if there is a pullback, then you want to quit in here at break even. Now to identify those bad trades, I use a 5-minute chart and the bid-ask visualization of the footprints. I do this in order to see the aggressive buyers and aggressive sellers. Let's now have a look at some examples so it's more clear. Selling activity. Imagine that this is your support. You go long from there, but the price goes past your level without any reaction, and you see that there are selling imbalances. In here, also in here, delta is negative, so in this place you know that it's bad. More selling imbalances. Those selling imbalances in here, and the price is below your level. There are whole 5-minute candles below your level, which is another warning. So when there's a pullback to your entry point, this is the best place to quit your trade. Don't hope that the price will turn and go upwards, because the sellers are clearly stronger in here, so you want to quit your trade when you are offered a chance. And this chance doesn't usually last too long, so you need to be quick, all right? Another example, imagine that this is your resistance level, where you go short from. There's no reaction to the level, there are buying imbalances, aggressive buyers pushing the price upwards, strong buyers in here, delta is positive, whole 5-minute candles formed above your level, which doesn't really seem good. Still, delta is positive, so when you are offered a chance to quit at break even, you should do it. Now, another example, imagine you have a support in here, you went long, but there's no reaction at all, the price is still slowly going through your level. Huge numbers on bid, there's a selling imbalance, again, big numbers on bid. Also in here, delta mostly negative, whole candles below your level, so the best thing to do is quit in here at break even. Now in this case it's not so clear cut because there are buyers jumping in, aggressive buyers, which is sort of tempting to stay in the trade, but afterwards selling imbalances, which is not good at all. So if you're offered to quit the trade for the second time, you should do it. Let's go into another example. The price is going downwards towards your support level, you go long, but there's no buying reaction at all, delta is negative, huge numbers on bid, no sign of buyers, 2 whole candles below your level, again selling imbalances in here, so in case like that you just pray that there will be a chance for you to quit at break even. So when the price hits the entry point again, you are offered a chance, a quick chance to get out, and you should take the chance, all right? And you should be quick. Now in here, imagine that this is a resistance zone, the buyers are pushing the price upwards, there's no reaction whatsoever to the resistance, delta is positive most of the time, whole 5-minute candles above your level, price continues upwards, there are buying imbalances, no reaction at all to your level. Now in here delta is close to 0 or slightly in negative numbers, but there is not really any sign of aggressive sellers. So this whole situation doesn't look very promising with a short trade, so the best thing to do, wait for pullback to break even, and if you are offered a chance you should take it and quit the trade in here. Alright, so Imagine that this was a resistance, you went short from there, but there's no reaction whatsoever. Delta is positive, it's really positive, and there are also those buying imbalances. And this is real bad because you see that the buyers are aggressive, way stronger than the sellers. They are dominating the market, pushing the price upwards. There's a rotation above your resistance level, which is also bad. So when you are offered a chance to quit at break even, you should take the chance. All right, in here, at first touch. Now this is very similar scenario. Price is going upwards. Imagine that this is your resistance level. You went short from there, but delta is positive. Also in here, delta is positive. No reaction whatsoever to the resistance. There are buying imbalances. The price goes above the resistance. A lot of buyers in here, a lot of aggressive buyers. So when you see this, you know it's bad. And then there is a rotation above your resistance, which is also bad. What you want to see is a quick reaction to resistance, not a rotation above it. All right, so it seems that the higher price was accepted and there is some temporary balance above your level. Doesn't seem good at all, so when you have a chance, you should quit your trade at break even. By the way, this is also the reason why I like to use wider stop losses for those intraday trades using the order flow, because I have some room to do stuff like that, to watch the order flow and decide whether I want to stay in the trade or no. If my stop loss was too tight, let's say like 5 ticks, it would be, for example, in here, I would just take the stop loss and that would be it. But this way, there is some room for the price to breathe and for me to think about the situation and possibly to quit the trade at break even if I don't like the development. All right, so this is also the reason I like to use wider stop losses. All right, last example. Imagine that this is your support. You went long from there. Price went towards your support pretty aggressively, actually. There are selling imbalances, negative deltas. As the price shoots past your level, there are also selling imbalances. This doesn't look good at all. Then you see those big numbers on bid, and this is sign of aggressive sellers at the low of the footprint. And this is a thing which usually gets tested. Heavy volumes at low of a candle. So especially in a trend. So when you're offered a chance, you should quit the trade. You can do it right here, or you can do it after this whole footprint got formed below your support. So you can also quit in here. But I would probably quit in here because of this. Heavy volumes like that at low of the candle in a downtrend usually get tested, like they got tested in here. So that would be the warning for me, and that's why I would quit the trade in here in this footprint. Alright, so that's for this video, guys. I hope you found it helpful. Now again, let me repeat that you don't need to manage your trades like that. You don't need to quit a bad trade like I showed you, because this is really an advanced technique, and if you are new to order flow, I would just use a standard stop loss and not to try to quit your trade at all at break even like this, because most likely if you don't have the experience, this would just make you miss a good winning trade, because you would get scared too soon and you would quit too many potential winners. Alright, so that's my advice on this advanced method. So anyways, that's for this video. Thanks for watching, and I'll see you in the next one.
All right, Free. What's the question?
I was kind of confused that he's using the low volume node for stop loss.
Mm-hmm.
And don't we like expect them to fly through those places? I don't know. Confused.
Yeah, but if you're short, so like here, actually, let me just pull up.
Thank you.
Yeah, no worries. What he's saying, no, the whole reason I do this is to create conversation, right? I could just post Trader Dale's videos and everybody could watch them individually. And so this way it gives, like an opportunity for conversation, which would just further like learning, right? Like the more people talking and having conversation, the more, like it's going to, whatever, explain things. So that's the reason that I do it this way, is literally to create conversation. So like, if we go 30-minute, our high volume is up in here, right? Mostly, and then we've got a little bit down here, right? I don't know that this is the best example, but it'll work. Basically, if I was going long, right, and we come down into this low volume area, like it's probably going to go to the far, like down to this high volume node down here. So he's saying use this low volume area as a place to stop out, whether it be, below or above. If you're long and you get into a low volume area below, it's probably going to keep going lower. If you're short and it gets into a low volume area above, it's probably going to keep going higher.
Okay.
Make sense?
Yeah.
It
But
doesn't
usually,
sound like it's making sense to you.
well, because I have it hasn't worked for me.
What's
But
that?
then again, I'm not. Well, I haven't been able to successfully trade them.
You're cutting out
So,
really bad.
hang on. Can you hear me now?
Okay, yeah.
Better.
Mm-hmm.
I haven't been able to actually trade those low volume nodes.
Mm-hmm.
So, yeah, I just got Quanta, and so I need I don't know. I'm confused and I'm not having much success with it.
So this is my third part of this series. Have you gone through part 1 and 2?
Yep. Yep.
And you're
And
still
basically, well, yeah. What
confused?
can I say? I'm a little bit low learner. Well, because when it's different when you're actually doing it and watching the video, like it reacts different. It's always different. So, well, I saw the 2 videos that you did,
Mm-hmm.
and I appreciate the double speed on them because he's very slow. And even though you shared all of his videos and stuff, that was really great of you. But what I'm trying to say is, on those videos, he's saying these stacked POCs on the order flow candles, those are areas that you would go after a trend or whatever. And
Mm-hmm.
then you stop off the low volume node. But I haven't had success with those low volume nodes. They just rip through them, and I don't know. And I'm having trouble learning the quant hour too. Any tips there would be appreciated.
Um, I mean, so if we're long here, right? We have a high volume node. There's a little high volume node here. There's a little high volume node here. And then down here, there's really, I mean, I guess there is some volume, but not very much comparative to the rest of this. Like, if we got long here, right? Depending on how big of a move we're looking for, I don't think many of us are going to be willing to risk 16 points. But like, let's say we risk 10. You would probably want to go a little bit lower. But once you make it into this low volume area here, like, your trade is probably invalidated, is what he's saying. Right? We might bounce down here, but at that point you're risking too much for not enough reward. Right? Or even worse, like, if we come into this low volume area here, most likely they're going to go from here down to here, right? So you would want to cut your long. You don't want to stay in for a long time. But it sounds like this is probably too advanced for you. And I'm not saying that to be insulting. Like, before you get into order flow, you should be really comfortable trading off of volume profile. And like, if you watch my videos, or if you watch what Shorty says, I'll just use this right here as an example. Previous week value area high. We broke above, right? We got 3 5-minute candles or more above. And so for me, I would not count these candles here, these first 2 candles, because they both, like, well, this is our initial one that breaks through, but when our second candle touches, that becomes candle 1. if that makes sense. But then since our third candle also touches, this becomes candle 1. This is now candle 2. This is candle 3. So we got our 3 5-minute candles above previous week value area high. Most likely if we retest, we're going to go higher. This is where things probably get a little tricky based on what Trader Dale was talking about. I actually like what he was saying. It's not something I've ever implemented, but I might start implementing it. We're always trying to play, like long off of support and short off of resistance. So here we break above, we get our 3 5-minute candles or more. The retest happens the next morning, when the market opens at 6 p.m. Eastern, right? And this would be our entry for longs, right? And then what Trader Dale was talking about is if we don't get the reaction that we're looking for at support, right? We break below. This is candle 1, 2, 3. So now we've had 3 5-minute candles below. What he was saying is at this point, you can stop out, break even, instead of risking this trade going against you. Because technically, right, we break above, we get our 3 5-minute candles, retest. We're looking for a reaction there. But if what happens is we break above, we get our 3 5-minute candles, retest, we get a little bounce, and then we break below, now we have 3 5-minute candles below and we're retesting. We're probably expecting them to go much lower. In this case, they don't, right? Like, you would be pretty bummed if you closed out break even and then it does this. But that's part of the risk of, and this is exactly what he was saying, like, this is going to be a more advanced technique and it's riskier. I do like, though, the idea of, like, we're waiting for 3 5-minute candles, retest, go long, break below, 3 5-minute candles, retest. Most likely they're probably going lower. Wouldn't be bad to close your trade break even here. Sorry. I was trying to erase that. But so you should be really comfortable trading just off of this and using like your single prints or poor highs, poor lows for stop loss and take profits before you start worrying about order flow. I don't really remember what my point was.
Well, you were helping me to see, the low volume nodes.
Mm-hmm.
And so, like, when he says put your stop loss there, I'm thinking, well, aren't we targeting the bottom of those low volume nodes, or now are we using them? It's like opposite.
Okay, so I'm not looking at a footprint chart. I'm just looking at volume on my volume profile chart, right? But so
yeah,
if this is my entry based on volume profile, right? And then below this, I have like another support area, which is right here, right? And then I have another low volume node. Where's that? I have another low volume node here, right? And then I have another high volume node here, right? So basically what he's saying is like, this is your entry. Obviously you need to give it breathing room. So he was saying like, he specifically said like, if it's too tight, so like from this high volume node to this one, if I was to enter here, I'm only giving it 3.75 points to breathe. It's not enough room, right? Like this is way too tight of a stop loss if my stop is somewhere in this low volume node here, right? So this is my next high volume node. I could put my stop in this low volume node here, right? So like,
okay, so
this is my entry, and then my stop loss could be somewhere in this low volume node.
So when you're looking at those high volume nodes and low volume nodes from the day before, and here you are trading today, and the developing volume profile is showing you something different than the day before, how do you trade that?
I'm sorry, ask again. I didn't hear
So
you.
when you're trading, let's just assume we're trading the volume profile, get order flow,
Mm-hmm.
and you're looking at prior days volume profile,
Mm-hmm.
right?
Yep.
And today's developing volume profile is not matching up with yesterday. How do you trade that? Like you have a low volume node yesterday, that level, and
Mm-hmm.
today you're at that level, and here you have a high volume node. Now what? How do you
Oh,
do that?
so I look at candles. Um, like right here, it's pretty safe to say this is resistance turned into support, right? And
Mm-hmm.
so let's just, I don't have an entry here, but let's just pretend I entered long here for whatever
Mm-hmm.
reason. I immediately look left and I go, hey, where should I stop out? Based on the information I have on the chart, and my eyes would immediately go
That
to
wick. Yeah.
this candle, right? But I
Yes.
don't want to put my stop at even with this. And this is a low volume node, but that's irrelevant. We're just looking, like we're going based off of the information you're saying. So like we don't have
Mm.
a low volume node in that area. So let's just ignore volume profile and go based off of these candles. This is probably a good place to put your stop. But so if I'm long here, right, I don't want to put my stop right at this because if they're going to do a liquidity sweep, they're going to come a little bit below that and then they're going to go. So my stop
Mm.
would be something like this. Um, sorry, I'm trying to figure out how much I'm risking here. When I'm trading ES, I'm generally comfortable doing anywhere, I mean, up to like 10 points, unless
Mm.
I have like some really high conviction, that I might need to go a little bit lower, like 12 points or something, and still able to get like, double what I'm risking for my reward. So in that instance, um, my trade might look something like this, whatever. As long as I'm getting at least 2 to 1, I'm looking at my candlesticks. And the reason that I would be willing to go higher than this here, what is this free? What's happening here?
That's a poor high.
Exactly. So more likely than not, price is going to break through this and go higher, right?
Mm.
You could even
Mm-hmm.
make an argument to target previous week value area high. I don't like, did we spend 45 minutes below previous week value area low? Yes. So there's a good chance that when we retest it here, they're going to run this up to the high. Whatever, we missed this entry, or maybe it would be better to do the trade based off of entering here, but we chose this area. It doesn't matter,
Yeah.
but you could easily make an argument to target here as the place to take profit. We have a poor high. Most likely price is going to smash through that and go higher. So you're not just trying to use like, like one thing for stop loss, take profit, whatever. You want to look at the big picture. When I'm looking at stop losses, I'm looking at candlesticks. And where I see an area that's acting as support and resistance below my entry, I know I want my stop loss at least a little bit below that. So if they do a liquidity sweep and come a little bit below to grab the liquidity and then they run it, I want to stay in the trade. And then if we were to incorporate like the low volume node stuff that he was talking about,
Yeah.
like, could you have a lower volume node than this right there? It's a gap. There's no
Probably
volume,
no. No.
right? So like this is a good spot to close our trade, right? This is, if we come to here, what is most likely going to happen with the gap?
Get filled.
Yes. So this would be our
But
low
look, they
volume
never did it.
because price never came down here.
Right. And meanwhile, I'm thinking
I don't
You
like.
believe me?
You want to get stopped out free? I really don't understand. Like,
No, I want to catch those bigger moves, like when they go through those low volume nodes, and I never do. And I'm just like, I'm trying to understand them. I don't know, struggling with that.
but you're talking about two very different things.
Yes.
We're doing a class on. So this is part 3 of the class on order flow. And he's
Yeah.
talking about using low volume nodes as an area to stop out of trades.
Stop out. Yeah.
And you're
Yeah.
saying,
That's
I want to
that's
use
kind
the low
of
volume
what.
nodes as a place to catch the bigger move. That's not
Well,
what we're
no,
talking about
no,
today.
no. I know, but so like, yeah, there's two things going on. There's order flow and volume profile. And so
Of
when
course.
I was watching your order flow lesson, because I'm trying to figure out, I've been doing volume profile for quite some time now,
Hmm.
and maybe order flow works better for me because I'm not really progressing with the volume profile. So like it's a, there's different strategies, totally two different animals.
Of course.
So yeah, so that's why I'm asking you these questions about volume profile, because they come up because it's opposite in order flow. You know what I mean? It's like the opposite, just like poor highs mean different things. Sometimes a poor high means you're going to go through it. Sometimes a poor high means that's it. And, the different
No, I mean,
methodology.
no, I don't. So I don't agree with what you just said, right? Like, nothing works 100% of the time. So a poor high, we would always expect price to break through and go higher and clean up the auction. Does that mean it happens 100% of the time? Absolutely not.
Yeah, but a poor high in that, in market profile and that, yeah. But that's also considered a strong high in the other, and a cooling or whatever that, I don't remember. Sorry, my memory. You know what I mean? A poor high is also find a strong high. Like when you have three taps, like you showed me those three candles hitting there, that meant it wasn't going to go any. You know what I mean?
What
It's like
3 taps?
confusing me. You showed me those three candles and you said, "What is this?" And I said, "A poor
These
high."
here.
Yeah,
Okay, and what
that could
happened?
also be a strong high.
I don't agree with you at all.
Get it in the book. One of those books. I don't know if it's Anna Cooling or Trader Dale's. One of their books calls it a strong high, and then in market profile, it's poor high. I'm like confused.
Okay. I see, especially like this where we have a confirmation, right? Like break above, retest, tap, 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 and then smash through it. So let me ask you this. Um, it's not perfect, but let's just pretend this comes up exactly to this level.
Mm-hmm.
So this is my first tap of this level.
Mm-hmm.
This is my second tap. Now I have a trend, right? What's probably going to happen on the third tap?
What do you mean? Now you have a trend. Now you don't have a trend. Now you're in a bracket
No,
right
this is
there.
a
You're in a
trend.
range.
I have 2 taps on the same level. Just like if I do this.
Oh.
First, second, third, what would normally happen here?
You'd go along there.
You'd bounce. First, second, third, it's going to go lower. It's going to reject. So this is one of the things that Shorty, like, that will just always stick in my mind is once, like, when the first bounce on a level, like, nobody knew this was, I mean, like, you could argue, like, this here, right? This was the first bounce. This is the second one. But just for the arguments of what we're talking about, nobody had this as a level. Here, nobody had this as a level, but now we can connect 2 points, and now we have a level where we'd expect a third. Like everybody's expecting, every retail trader is expecting a bounce here. Do you understand that?
Yes.
So whenever you can connect 2 points, the third tap of that level, you're generally going to expect it to do the exact same. Because here I may not have had a level. Now I can connect these 2 points, right? Depending on your time frame, this is going to be a double top. The third tap, they reject lower. And now the fourth one, it started to act as resistance, right? And then when we came to it again, it acted as resistance, it looks like. And then we smashed through it.
Okay. I really appreciate your time showing me that. And I know this is about order flow, so I don't want to take too much of your time. But yeah, I see what you're saying. I really appreciate it.
Yeah, no worries.
I don't want to throw you off. Yeah, thank you.
I think maybe me and you should get together.
Yeah, I think so. Would like,
because it sounds like you're trying to combine too many things, and you're just making yourself confused.
I have too much stuff on my chart. Keep it simple, stupid. I think I need to do that.
Well, like when I mentor somebody,
when can we do that? Huh?
I don't know. We'll figure it out. But when I mentor somebody, it's like you're trading off a volume profile only for at least 2 months, if not 3 months.
Yeah, I'm good with it. Yeah. All right, we'll message you. I'll message you.
All right, let's go on to the second video, unless anybody else has any other questions. No, you're good.
Thank you.
I don't hear anything, so we'll start.
Hello, this video is going to be about finding an ideal place for taking your profit using the order flow. Now, if I had to point...
Sorry, I'm going to start over.
Hello, this video is going to be about finding an ideal place for taking your profit using the order flow. Now, if I had to point out the one single most important thing from this video, which you need to remember, then it would be this. Take profit in heavy volume area. That's the most important message from this video. The reason for that is because heavy volume areas work as a support and resistance zones. So whenever the price reaches this heavy volume area, this support or resistance zone, there is a risk that the price will turn, and that's why it's ideal place to take your profit, to quit your position before this risk arises. All right, so take your profit in heavy volume area, or just a tiny bit before the price reaches the heavy volume area, in case it turns a little bit sooner. Now, for that, in intraday trading, I use a 30-minute chart. And the cell content is volumes. You can set this up in here, so the chart looks like this. Now, the places where the heavy volumes were traded will be darker than the rest. So, for example, in here, this is area where heavy volumes got traded. Also, for example, in here, those dark shades of gray, all right? And also, of course, the point of controls of those footprints, those high volume nodes. Those are also important areas where heavy volumes got traded. So those are areas where you want to quit your trades. So, for example, in this case, imagine you are in a short somewhere from here, and you're looking for ideal place to quit your trade. So you look into this area to determine where the heavy volumes were. And in this case, it's pretty nicely visible. It was in here, so the ideal take profit would be somewhere in here before the price reaches this heavy volume area, right? So this is the take profit. And the reason is that this could work as a support, and it could potentially turn the price, as in this example, all right? So you want to quit the trade before it reaches the support area. Now, if heavy volume area is too close, so imagine you entered, for example, in here, and the first heavy volume area is here, which is a bit too close, then you have two options. You can consider taking your profit at the next heavy volume area. So this would be the first heavy volume area. This would be the second heavy volume area. So you would choose this one, because this one is too close. Or you can disregard the trade, so not enter the short. If you see that the take profit would be too close, that the risk reward ratio would be too negative, it's just better not to take such a trade. All right, so you have two options. Either take the profit in here or not to trade the short at all. Now let's talk about some examples so you get the feel for the ideal take profit placement. In this example, imagine you are short, for example, from here, And what you want to look for is heavy volume area to quit your short. So you went short from there, and you want to look into this area. And in here, you can see that there was heavy volume area in here. Those nodes. And also, the overflow is darker in here, so you can tell that this is high volume area. So this is where you want to take your profit from the short trade. All right, before it reaches this high volume area, because it could potentially work as a support, and the price could go upwards from it, which you don't want to risk, obviously. So you quit your trade in here. Now, in this example, imagine that you are short, for example, from this place. You are in a short trade, and now you are thinking where to take your profit. So you look into this area. You always look into the area where the price went towards your trade entry, all right, towards this resistance. So you look into this area, and in this case, it's pretty clear. This is the heavy volume area. So you want to quit your trade. I would quit it one tick above the high volume node. So I would quit it in here. The reason is that this could potentially work as a support, this high volume cluster. So this could work as a support and potentially turn the price. So you want to quit your trade in here before it reaches the support. Now, another example, imagine you are short from here. So you look into this pullback area where the price went towards your short, and this is the zone you're looking for. This is the potential support. This is where you want to quit your trade, one tick above this high volume node. All right, this whole area could work as a support. As you can see, it actually did. So you want to quit your trade before it reaches this support, always before it hits the heavy volume cluster. So in here, imagine you are short from there, and this is heavy volume area where you want to quit your trade, one tick above it. So there are two high volume nodes in here. Ideal place to quit the trade is in here. All right. Now, actually, this would also be a good place to take your profit. This is extremely strong high volume node, but this is a bit too close to the entry point. So if this is not enough for you to take a profit, then go for this one or don't take the short at all. All right. Now in here, if you are short, for example, from here, then the ideal take profit would be those high volume nodes, one tick above them. Always look into the area where the price went towards your resistance. So if this was the resistance, this is where the price went towards it. So in this area, you want to search for the high volume nodes. Well, actually, in this case, there could probably be an even better place or a safer place to quit the trade. It would be this high volume node. This would be safer to quit the trade in here, not wait until it reaches this double node area. It's not too much apart, those two areas, so it would be safer to quit the trade in here. So very quick reaction. This is where you would quit your trade. So let's have a look at this example. Imagine that you are long from here, and this would be the ideal take profit, one tick below this high volume node. All right, this is where the price went towards your entry place, towards the support. So this is where you want to look for significant volume clusters or for high volume nodes like this one. So this would be the ideal take profit, one tick below it. Now let's have a look at another example. Imagine you entered a long, for example, from here. The ideal place for take profit would be below this double high volume node. It would be in here. By the way, if you are short from this area, now let me draw it again so it's clearer. If you are short from this area, then the ideal take profit would be in here. This volume cluster, one tick above the high volume node preferably. So in here, right? And one more example on this picture. If you are short from here, then the ideal take profit would be this area. Those high volume nodes, especially those two. So this is where I would quit the trade. As you can see, the price continued downwards. So in this case, it would actually be better to hold the trade, but it would be safer to quit the trade in here. All right, so let's have a look at another example. Let's imagine that the price is going upwards, and in here, there is a resistance zone where you go short from. So you look into this area and you search for heavy volume areas, for a heavy volume cluster. What should catch your eye is this volume node and this high volume node, almost exactly at the same price level. Also, as you can see, there were pretty massive volumes created in here. So I would take the profit one tick above this high volume node. It would be in here. So if I went short from there, this would be the take profit. I wouldn't want the price to test this support created by those volumes. As you can see, eventually the price turned and reacted to those volumes. So it would be a nice move to quit the trade in here. Now, another example. Actually, there are two examples on this picture. Imagine you are long from here. You entered a long, let's say that there was some support, and you entered long from there. You are looking for a place to quit your trade. This is a significant area, high volume node with a huge number of contracts traded there. So one tick below it, just to be safe. This is your ideal take profit. Now imagine you go short from this high volume node, because it is a strong resistance. So you go short from there, and the ideal place to take your profit would be this volume cluster. Heaviest volumes in the volume cluster traded in here, 655 contracts. So the ideal take profit would be one tick above it in here. All right, so let's have a look at another example. Imagine you are long from here, from some strong support, and this is a pretty significant volume area, especially those two high volume nodes in here. And also you can see that there are also pretty massive volumes above them. So the ideal take profit would be one tick below this double high volume node, which would be exactly in here. All right, so if you went long from this area, this would be the ideal place to quit your trade. Now in this case, imagine you went short from here, and the ideal place to take your profit would be this area. In this case, it's not that easy to tell, but I always like to look at the heavy volumes which got traded before aggressive buying activity, like in this case. So it would definitely be before those two high volume nodes. So the ideal take profit in this case would be in here. All right. In this example, it's not as clear, not as simple, but you gotta pick a place for a take profit, right? So this would be my pick. Now imagine you caught the high, you went short, and the ideal place for take profit in this case would be definitely somewhere before this heavy volume area. As you can see, there are heavy volume nodes pretty close to each other. There is triple high volume node in here, so my best pick would be take profit in here. All right, this would be the ideal take profit for the short from here. Now imagine that you went long from here, you went long, then the ideal take profit in this scenario, in this case, would be before this area, preferably before the price reaches this double high volume node. So in this case, the ideal take profit for the long trade would be in here, because the price would potentially react to this double high volume node, to this volume cluster, and go short from there. By the way, you can also often see those volume clusters on the volume profile in here. This is the volume cluster. You can also use my volume profile pack to determine where to quit your trade using volume clusters on volume profile. The ideal tool for that would be the flexible volume profile. So let's have a look at the last example. Imagine you went short from here. Then the best take profit would be either in this area, so in here, because of those volumes and also those heavy volumes, or the second take profit, those two high volume nodes, one tick before them, so in here. All right, so this would be take profit number one. This would be take profit number two. As you can see, the price didn't really react to the take profit number one, and it reached the take profit number two, and it reacted from there. But it would be safer to quit your position, or at least part of your position in here, because of those heavy volumes traded there. All right, so that's for the take profit video. So always remember the basic rule of all this. You always want to take your profit before the price reaches a heavy volume area. That's the most important lesson from this video. So anyways, thanks for watching, and I'll see you in the next video, where I'll talk a little bit more about take profits and about quitting your trades.
So, I don't know if anybody has any questions about that video, but at the end of this, I'm going to do something a little bit special. I'm going to say it's for free, but for everybody, that I think should be very helpful. I'm going to start video 3. If anybody does have a question, let me know.
So this video is going to be about trading your take profits. So it's going to be for those who like trades and get the maximum from them as possible. Now you can trail your trade if you see aggressive buyers or aggressive sellers who are pushing the price your way and who are dominating the market. So if you look at this example, then you can see that clearly sellers are way stronger in here. They are way more aggressive. You can tell it by imbalances, setting imbalances all over the place, especially in here. And you can also see it on strong delta. You can see that all those footprints have negative deltas. You can see that also in here. And also you can see that one side is clearly stronger. In this case, it's the sellers, because the numbers on bid are way bigger than the numbers on ask. You can see it right here and here. Those huge numbers on bid. So by all that, you can see that the sellers in this case are dominating the market. They are way more aggressive than the buyers because we have the imbalances, we have strong delta, and also one side is way stronger than the other. So when you see something like that, you can trail your position, you can trail your profit, and you can try and get as much as you can from your trades. Now, when you should stop trailing your position is when you see a warning signal like I showed you in the previous video. So in this example, it would be a sign that buyers are entering the market. So you would see, for example, a limit order, buying limit order, which would be on ask, or absorption, or aggressive orders, in this case on ask. So aggressive buyers would be on ask, the right side of the footprint. And also another warning would be if you saw delta divergence, which would mean price going downwards, but delta rising. So in this case, delta would be rising. You would best see it on the line cumulative delta indicator. All right, so if you see any of those warning signals, then it's best to stop the trailing because those are signs that the trend could turn. All right, so let's now have a look at some examples. In this case, imagine you are long, you want to trail, and what is the first thing you should probably look for is buying imbalances. When you see buying imbalances, this is a sign of aggressive buyers who dominate this market right now. So those guys are pushing the price upwards. I'm looking for this on the 5-minute chart. So as long as those buyers are active, as long as the delta stays mostly positive, you can trail your position, all right? This is a sign of buyers dominating the market. Now, on this example, it's pretty clear that sellers are dominating the market, so you can trail your short position if you see something like that. Price is dropping, delta mostly negative, there are selling imbalances. All those are signs of aggressive sellers dominating the market. Now, what I see in here, this could be something which could signal a trend change, so I would probably quit the trade in here. A huge number on ask, this could mean aggressive buyers jumping in. There are also those 128 contracts traded on the ask, so that's also a sign of aggressive buyers. So this would be a place to take your profit, but all this is selling pressure, all right? Aggressive sellers pushing the price downwards. You can also see huge numbers on bid, which means aggressive sellers, all right? So when you see something like that, you can stay in your short and you can trade it. Now in here, there are also aggressive sellers. First thing to notice, selling imbalances. Sellers are dominating the market. All those selling imbalances showing us that the sellers are way more aggressive than the buyers. Delta is also negative for each footprint. And in a situation like that, you can trail your short trade until you see a warning, right? Or until the price reaches a support zone. So imagine you are trading your position in here. You see aggressive sellers in here, imbalances in here, but then you can see buyers start to jump in. Delta turns positive, buyers jumping in, delta still positive, buying imbalances. It is best to quit your trade in here because you can see that the buyers are jumping in and that the price could turn upwards, all right? So the risk of the price turning is high in here, in this area, because of those buyers jumping in. So it's best to quit the trading and just to quit your trade in here. Now, another example where you can use trading, again, selling imbalances, negative delta, next footprint, also negative delta, huge numbers in here, more selling imbalances, again, negative delta. Those are signs that sellers are stronger than buyers, and you can trail your short position until something tells you that buyers are jumping in and that it's risky to continue trading, all right? But until you see some warning or until the price reaches some support, you can trail your short. You can do that as long as you see those sellers jumping in and dominating the market. Another example of strong sellers, first thing to notice, or the first thing I always notice, selling imbalances, then negative deltas, everything on the 5-minute chart, all right? Then in here, even though the price is going downwards, delta turned positive. Another footprint, positive delta. This doesn't look good, so this would be the place to quit the trading and take your profit. All right, somewhere in this area, as soon as you notice buyers jumping in. As you can see, there are no more selling imbalances in here, only those buying imbalances. Well, there is one selling imbalance in here, I overlooked this one, but there are more buying imbalances, deltas are positive, and it seems that the pressure of the sellers is no longer there, so best to quit somewhere in this area. All right, so this is the last example. Another sign of aggressive sellers in here, where you can trail your position. There are selling imbalances, sellers dominating the market. We have negative deltas all over the place. More selling imbalances, again, delta is negative. Then some buying imbalances in here, but after that, a lot of selling imbalances. So all those are signs of the sellers dominating the market. In here, the delta changes for the first time. We have positive delta, buyers jumping in, buying imbalances. As you can see, the market is not trending anymore. It's in a rotation. So in this case, it would be best to quit somewhere in this area, all right? I would say as soon as you see those buyers jumping in, delta turning positive. All right, so to summarize this, if one side of the market is stronger than the other one, and you still see the pressure of the one side, so for example, in this case, you see strong pressure of sellers, you can trail your position, and you can do that until the pressure stops and you see buyers jumping in, all right? Or until the price reaches some support or resistance zone. But if you see the pressure, you can stay in the trade, trail it, and try to make as much of it as possible. All right, so that's it for this video, guys. I hope you liked it, and I'll see you in the next one.
Any questions before I move on? I'm going to queue up the next video, but pause here for a second to give a chance if there is a question. Nope. Okay, moving on.
This video is going to be about take profit and about warning signals, which could signal that there could be a trend change, which means that it's best for you to take your profit before the trend change occurs. So those warning signals are those for a limit order absorption, aggressive orders, and delta divergence. Now, if you remember, I talked about those in previous videos where I was talking about trade confirmations, but in this case, those signals will work as sort of warnings, which if they appear near support or resistance zone, then they tell you that you should immediately quit your trade, because what they basically do is they confirm the support level or the resistance level, and they signal that the price will turn. So imagine that you're, for example, in a short trade, and somewhere in this area, there is a support. So you're in the short, the price is reaching the support area, and somewhere in here, there is, for example, the limit order or the absorption, aggressive orders, or delta divergence, for example, in here. And this tells you that the support will most likely work because it gets confirmed by one of those four. And in this case, they work as a warning because remember, you are short. So they warn you that the support is probably going to work and that you want to quit your trade immediately. So for example, if there was a limit order in here, then it would be the last warning for you to take your profit before the price reacts to the support and before the price turns. All right, usually that's the last warning you'll get. Now, if you skip through those videos and if you are watching this first, then I suggest you first watch the videos which I go more in depth with those four, as I won't be describing those in this video. I'll just show you some trading examples, how you can use them as a warning. So let's first start with the warning signal number one, the limit order. So imagine you are in a long, and then suddenly, somewhere around a resistance zone in this area, this appears. This huge limit order, a huge selling limit order. That's the signal for you that you want to quit your trade immediately. So if you see this in a resistance zone, this is the place where you quit the long. This is the place where you take profit. And you do that immediately in here, all right? Now, what I forgot to tell you is that I like to watch for those warning signals or 5-minute charts. And the sell content is obviously bid and ask for this one because you need to see what's on bid and what's on ask, all right? So 5-minute chart, in my experience, this is where you can nicely see those warnings. So that's why I look for them on the 5-minute chart. So let's have a look at another one. Imagine you are short, somewhere in here there is a support, and you are trailing your position, and suddenly you see this. This is a buying limit order, those 117 contracts. This is the last warning for you. So this is where you take your profit. As soon as you see this jump in, you quit your trade, all right? Because it was the warning signal that probably somebody big jump in with 117 contracts, and that the price will most likely turn upwards, all right? Now, another example of the same thing. Imagine you are trading a short position. This is a support somewhere in here, and suddenly this thing appears. Selling limit order, and then aggressive buyers start to jump in. This is most likely a big limit order waiting somewhere in here, those 215 contracts. Somebody big was waiting in here to enter a long. So when you see this, you immediately quit your position and take your profit, all right? Now, one last example on the warning signal number one. Imagine you are long, you are trading your long position, and you are trailing the long position until you see something spooky, all right? Something which warns you about going long. Imagine that there was a resistance zone, and in that resistance zone, you see this, especially those 160 contracts on ask. This indicates that this is most likely a limit order And because it's on ask, it's most likely a selling limit order. So in that place, most likely somebody big jumped in with selling limit order, and this is where you want to take your profit because the price will likely turn from this area. All right, that's the last warning, this limit order. Now the second warning signal is the absorption. Imagine you are short. Imagine this is a support somewhere in here. You're trading your position and you want to quit it somewhere in here, somewhere in this support. Now, imagine you're greedy. You want to get as much from the trade as possible. So you're still in the short, but then you see this a huge number pop up on bid as well as on ask. That's a sign of absorption, which got formed within support zone. So this is the last warning. And when you see that, you immediately quit your trade. You take your profit there. All right, so that's the warning with absorption. Let's have a look at another example of this warning. Imagine you are in a long trade, and what you are waiting for is a warning that sellers are jumping in and that the price will most likely turn. And when you see such warning, you want to quit your trade and be done with the long. All right, so in this case, there is a sign of absorption, huge numbers on bid as well as on ask. Imagine that somewhere in here there was a resistance zone. So when something like this forms near a resistance zone, then you definitely want to quit your trade right there. So this would be the take profit. All right. Now this resistance zone could be, for example, a resistance zone created using volume profile or using the order flow. This could actually be the high volume area which you found using order flow, like I showed you in the previous video. All right. So warning created in a resistance zone is a no-brainer, and you quit your position right when you see it. All right. So let's have a look at another example. Imagine you are long. Imagine somewhere in this area there is a resistance zone, and as the price progresses upwards, you see this heavy volumes on bid as well as on ask. This is a sign of the absorption. The sellers are absorbing the buyers run out of fuel, and there is a risk that the price will turn. So this is the confirmation of the resistance, and all this is telling you that it's time to quit your long. So take profit in here. Now, especially if you see aggressive selling after that, it's a no-brainer. You need to quit your position immediately, all right? Those are aggressive sellers jumping in right after the absorption occurred, all right? So it's no-brainer. You need to quit your trade in here. Now, last example of the absorption. Imagine you are in a short and you are trading your selling position. Now, imagine there is a support somewhere in here, and within that support, you see this pop up. A huge number on bid as well as on ask, and this is where you want to take your profit, because the buyers are absorbing the sellers and the price will most likely turn, and you don't want to be in a short when this happens. All right, so let's have a look at another warning signal. This one is aggressive orders. When you see aggressive orders jumping in against you, against your position, then you want to quit your trade. It is a no-brainer when this occurs in a support or resistance zone. When you see that, when you identify that, you should immediately quit your trade and take your profit and be out of the market, all right? So imagine in this case that you are in a short. Imagine that, for example, somewhere in here there was a support which you found, for example, using volume profile or the order flow. Now you see those huge numbers jumping in on the ask, and that's a sign that buyers started aggressive buying. You can also see imbalances jumping in, buying imbalances. So those are aggressive orders, in this case, aggressive buying orders, aggressive buyers taking the initiative, and they are most likely trying to push the price upwards. So when you identify that, you want to take profit and be out of the short trade. All right, so let's have a look at another example. So in here, imagine that you are in a long position, you are trailing your long position, and you see that sellers start to jump in. Huge numbers on bid. Those are aggressive sellers. Also, you see this could be an absorption. So absorption, aggressive sellers, also aggressive sellers in here, in here, in here, also in here, big numbers on bid. That's aggressive sellers entering their selling positions with market orders. So when you see that, you definitely want to quit your trade and take your profit as soon as you identify those aggressive orders. All right, so that's where you quit your long. Another example of the aggressive orders coming in. Imagine that you are in a short and you are trading the short until you see some sort of warning. In this case, aggressive buyers jumping in. Those aggressive buyers. Big numbers on the ask. And when you identify that, especially if it's in a support zone, in some heavy volume area zone, for example, then this is where you want to take your profit. This is where you want to quit your trade. All right, aggressive buyers jumping in, signaling that there could be a change in the price direction. Now, this is the last example of the warning signal number 3, the aggressive orders. Imagine you are in a long trade, and suddenly you see aggressive sellers start to jump in, selling imbalances. Sellers are way stronger than buyers. This is a sign that you immediately want to quit your long trade, because the sellers dominating the market, and they are likely to push the price downwards, especially if this happens in a resistance zone. All right, aggressive sellers jumping in, that's the last warning. Now you can also look on a delta, on the cumulative delta, and look for divergences. So imagine you are in a short trade, but you notice that delta is rising. This means buyers entering their longs. Even though the price is heading downwards, the buyers are entering their longs, and this means that it's time to quit your trade. So that's the last warning which you will get before the price turns and goes upwards. Now this warning is especially strong when you see that around support or resistance level. In this case, it would be around support. So when you identify that, when you identify divergence in delta and price around support and resistance zone, this is the warning that you should quit your trade. In this case, you would quit your short trade and you would take our profit in here before it's too late, all right? Similar scenario in here. Imagine that there is a support somewhere in this area. You are in a short, you are trailing your short position. The price reaches the support, and you notice that delta started to rise, even though the price is going downwards. So that's the divergence, that's the warning, and that's a signal for you to take a profit and be out of your short trade. Now, last example, imagine you are in a long, you are trailing your long position, and imagine that there is a resistance zone somewhere in here, and you notice that as the price reaches the resistance zone, the delta is negative. There's a divergence between price and delta because the price is going upwards, delta is going downwards. So sellers are entering their selling positions even though the price is rising. That's the warning signal, especially when this happens around a resistance zone. So when you see that, you want to quit your long, you want to take your profit and be done with it, all right? So when you identify that near a resistance or a support, that's the end of the trade because that's the last warning which you'll get before the price turns. All right, so that's for the 4 warnings. It's best to look for them around support or resistance zones. I'm not really into trading them on a standalone basis because you would most likely get a lot of false trading signals. But if you see those warnings around support and resistance zones, then you can be pretty sure that you are getting the last warning before the price turns. All right, so watch out for those, and I'll see you in the next video where I'll be talking about how to trail your take profit.
All right. We'll get ready for the next video unless anybody has questions. NAFI board, the yellow bar is the point of control. This is going to be the last video. I think it's fairly short.
Hello? This
2x speed. We should be done here pretty quick. The what I'm going to be doing after, you guys probably really want to tune in for. I guess I'll explain it then, but it's going to be more time consuming, but it'll be worth, like, really, really worthwhile, I think. So let's crank through this one, and then we'll get into that at the end.
Stop loss placement using the order flow. There are 3 ways how you can place your stop loss. First way is a standard fixed stop loss, meaning, for example, 10 pips stop loss. For every trade, it is the same, and this is the easiest method. Then you can also place your stop loss in high or low of support and resistance area. I'll show you some examples later. And also you can place your stop loss in low volume area. So for example, if you went short from this volume node, then the stop loss for you would be somewhere in here, low volume area. All right. Now for this method, for the third and for the second, I use 30-minute chart with volume cell content. So the chart will look like this, those shades of gray. All right. That's the volume cell content. Now the reasoning behind placing stop loss in a low volume area is that high volume area should work as a support or resistance zone. So this area should work as a support or resistance zone. In this case, we expect a selling reaction like this, so it should work as a resistance zone. And if the price goes past this heavy volume area, this is the heavy volume area, then the resistance failed, and you don't really want to be in that short trade anymore because the resistance has failed when the price goes past it, all right, past this area. So that's why you want to place your stop loss in low volume area behind those heavy volume areas, which work as a support or resistance zones. All right, so that's the logic. Let's now jump into some examples so it's more clear. So imagine this double node is your resistance. You want to see a reaction like this, and stop loss in this case would be in here. You would place it above this area where the double node got created. All right, so this would be the ideal place for take your stop loss. That is if you, of course, didn't use the fixed stop loss, all right? Now in here, imagine you have a support at this level based on this significant volume cluster. So you expect a buying reaction from there. Now this whole area has the low in here. So one tick below it, this should be the stop loss. This is the area I'm interested in, this little rotation, all right? This is the low of this rotation area, and that's why I place the stop loss there. In this example, this is a strong support. So when there's a pullback, you expect a buying reaction. And in this case, this is the low of the swing point. So the ideal place for the stop loss would be in here. A low of this area, all right? Now this is a very similar scenario. Imagine long level from here, you expect a buying reaction from those massive volumes. The ideal stop loss in here would be below the low of this area, so it would be in here. Now another very similar scenario, heavy volume area is in here. The most significant volume node is those 1015 contracts, so imagine that you have a long level there, imagine that you want to go long from there, and the ideal stop loss in this case would be in here, below this low of this area. Now obviously this is intraday trading, so if for example the wick of this candle was too much, then you wouldn't really want to place your stop loss that far from the entry point. So in case like that, it would be best to place your stop loss in low volume area. So for example in here, this is low volume area, or you could also use the fixed stop loss. So you could for example use 10 pip stop loss, which should be somewhere in here. All right, because for intraday trading you don't want to have the stop loss too wide. Now imagine you have a short level from this double node. The stop loss in this case would be either one tick above the high of this area, this whole area. So this would be the stop loss, or you can also use the fixed stop loss, which would probably be a little bit wider because this is actually a pretty tight stop loss. This is just 7 ticks on the Euro futures, which is a bit tight for this trading instrument. All right, so in this case, or in case like that, you may want to consider using a fixed stop loss, for example, 10 ticks, which would be somewhere in here. Now, in this case, it is pretty simple. Significant volume area, support in here, this high volume node, you want to go long from there, and the ideal stop loss, in my opinion, would be in here, below the low of this area. In this example, there is a double node, which means support, so you want to see a buying reaction from it, and the stop loss in this case could either be one tick below the low of this area, so in here, or if this is too tight for you, because it would probably be too tight for me, so in this case I would probably use a fixed stop loss. So if it was 10 ticks, then it would be in here. All right, because this would just be too tight stop loss. Now I must say that this is sort of a matter of preference. There are a lot of people, a lot of orderful traders who prefer to use very tight stop losses and who expect exact reaction to the level, and they use a high risk reward ratio, so they try to catch a trade with a very tight stop loss and then take a huge profit from it. What I personally prefer is trading around risk reward ratio 1, which means that I risk more or less the same amount of money as I get when I take a profit. So this is a matter of preference. If you prefer tight stop losses and big take profits, you can as well place your stop loss in here, just a few ticks below your entry point. Now in here there is a significant double node in here, so this would be a support. You would expect a buying reaction from there, and the stop loss in this case would be in here, below the low of this area. This is the low of the area, that's 7 ticks. If it is not enough for you, then you can also use a fixed stop loss, for example 10 ticks, which would be in here. Now in this case there was a strong downtrend, and within that downtrend, 2 significant high volume nodes, also pretty massive volumes in here, so this could work as a resistance. I would expect a selling reaction from it, and the stop loss for this trade would be either at the top of this swing point of this reaction, of this area, so it would be in here. In this case it would be 7 ticks, and if this isn't enough for you, then you can also go for the fixed stop loss and have the stop loss set, for example, in here. Now another example, strong rejection of high prices and heavy volumes created within that rejection with the high volume node in here, so this is the resistance. I would expect a selling reaction from it. Now if you like to use tight stop loss, then this would be the best place for you to place the stop loss. This is 7 ticks from the entry point, and if this is not enough, you can as well use the fixed stop loss, for example 10 ticks, I personally would prefer to have the stop loss in here. This would be a bit tight for me. Now in here there is a strong resistance, those high volume nodes, so I would expect a selling reaction from there. The stop loss in this case, ideally at the top of this area. So this would be the stop loss, and in this case it's 7 ticks. Now in here, strong resistance, high volume node there. Imagine the price hit the level, and the ideal stop loss in this case would definitely not be in here, at least not for me, because this would be crazy tight. So in a situation like this, when the stop loss would be really too tight, you definitely want to use the fixed stop loss, which could for example be the 10 ticks, somewhere in here. But this would definitely be too tight. Now in here, this is a strong support. My long level would be in here, based on the high volume node, and the stop loss in low volumes, which would be in here. The price should react to those heavy volumes. If it doesn't, if it gets lower into the area where the volumes are not so heavy, then I don't really want to trade there, so I would place the stop loss in here. Or maybe below this reaction, so 1 tick lower in here. Last example, this high volume node is a resistance created in a downtrend. This was pretty quick, pullback and short from there. And the ideal stop loss, a volume-based stop loss, would be in low volume area. So it would be in here. It would be pretty tight, so if you're not into taking such tight stop losses, then you can as well use the fixed stop loss, which could be, for example, somewhere in here. So you have some room for trade management and to let the trade breathe. Alright, now let's go into the next part of this presentation. In this part, I'll be talking about quitting a bad trade when you realize that you are in a bad position, you want to quit it. So how to quit a bad trade. This is sort of advanced stuff, you don't need to do that. I have sort of mixed experience with this. Sometimes you can really avoid bad trades really nicely with it, and in some cases, unfortunately, you miss potential winners because you just jump out of the trade too soon. So this is advanced technique. You don't need to use this one if you don't feel sure about using it, all right? So when you want to quit a bad trade, when there's no reaction to your trading level, no reaction at all, the price just shoots past it, there is a pressure which goes against your level, buying or selling pressure, and the price shoots past your level and the pressure continues. So if you look at the picture, price goes downwards. Imagine that there is a support. You entered along from there, but there's no reaction. There are selling imbalances. Delta negative. The next footprint delta is also negative. You have big numbers on bid, which means aggressive sellers pushing the price downwards. Heavy volumes below your entry point. This doesn't look good. So what you want to do when you identify a bad situation like this, you want to quit at break even at the place where you entered. So when there's a pullback, if there is a pullback, then you want to quit in here at break even. Now to identify those bad trades, I use a 5-minute chart and the bid-ask visualization of the footprints. I do this in order to see the aggressive buyers and aggressive sellers. Let's now have a look at some examples so it's more clear. Selling activity. Imagine that this is your support. You go long from there, but the price goes past your level without any reaction, and you see that there are selling imbalances. In here, also in here, delta is negative, so in this place you know that it's bad. More selling imbalances, those selling imbalances in here, the price is below your level, the whole 5-minute candles below your level, which is another warning. So when there's a pullback to your entry point, this is the best place to quit your trade. Don't hope that the price will turn and go upwards, because the sellers are clearly stronger in here, so you want to quit your trade when you are offered a chance. And this chance doesn't usually last too long, so you need to be quick, right? Another example, imagine that this is your resistance level, where you go short from. There's no reaction to the level, there are buying imbalances, aggressive buyers pushing the price upwards, strong buyers in here, delta is positive, whole 5-minute candles formed above your level, which doesn't really seem good. Still, delta is positive, so when you are offered a chance to quit at break even, you should do it. Now another example, imagine you have a support in here, you went long, but there's no reaction at all, the price is still slowly going through your level. Huge numbers on bid, there's a selling imbalance, again, big numbers on bid. Also in here, delta mostly negative, whole candles below your level, so the best thing to do is quit in here at break even. Now in this case it's not so clear cut because there are buyers jumping in, aggressive buyers, which is sort of tempting to stay in the trade, but afterwards selling imbalances, which is not good at all. So if you're offered to quit the trade for the second time, you should do it. Let's go into another example. The price is going downwards towards your support level. You go long, but there's no buying reaction at all. Delta is negative, huge numbers on bid, no sign of buyers, 2 whole candles below your level. Again, selling imbalances in here. So in case like that, you just pray that there will be a chance for you to quit at break even. So when the price hits the entry point again, you are offered a chance, a quick chance to get out. And you should take the chance, all right? And you should be quick. Now in here, imagine that this is a resistance zone. The buyers are pushing the price upwards. There's no reaction whatsoever to the resistance. Delta is positive most of the time. Whole 5-minute candles above your level. Price continues upwards. There are buying imbalances. No reaction at all to your level. Now in here, delta is close to 0 or slightly in negative numbers, but there's not really any sign of aggressive sellers. So this whole situation doesn't look very promising with a short trade. So the best thing to do, wait for pullback to break even. And if you are offered a chance, you should take it and quit the trade in here. All right, so imagine that this was a resistance. You went short from there, but there's no reaction whatsoever. Delta is positive. It's really positive, and there are also those buying imbalances. And this is real bad because you see that the buyers are aggressive, way stronger than the sellers. They are dominating the market, pushing the price upwards. There is a rotation above your resistance level, which is also bad. So when you are offered a chance to quit at break even, you should take the chance. All right, in here, at first touch. Now this is very similar scenario. The price is going upwards. Imagine that this is your resistance level. You went short from there, but delta is positive. Also in here, delta is positive. No reaction whatsoever to the resistance. There are buying imbalances. The price goes above the resistance. A lot of buyers in here, a lot of aggressive buyers. So when you see this, you know it's bad. And then there is the rotation above your resistance, which is also bad. What you want to see is a quick reaction to resistance, not a rotation above it. All right, so it seems that the higher price was accepted and there is some temporary balance above your level. Doesn't seem good at all. So when you have a chance, you should quit your trade at break even. By the way, this is also the reason why I like to use wider stop losses for those intraday trades using the order flow, because I have some room to do stuff like that, to watch the order flow and decide whether I want to stay in the trade or no. If my stop loss was too tight, let's say like 5 ticks, it would be, for example, in here, I would just take the stop loss and that would be it. But this way, there is some room for the price to breathe and for me to think about the situation and possibly to quit the trade at break even if I don't like the development. All right, so this is also the reason I like to use wider stop losses. All right, last example. Imagine that this is your support. You went long from there. Price went towards your support pretty aggressively, actually. There are selling imbalances, negative deltas. As the price shoots past your level, there are also selling imbalances. This doesn't look good at all. Then you see those big numbers on bid, and this is sign of aggressive sellers at the low of the footprint. And this is a thing which usually gets tested. Heavy volumes at low of a candle. So especially in a trend. So when you're offered a chance, you should quit the trade. You can do it right here, or you can do it after this whole footprint got formed below your support. So you can also quit in here. But I would probably quit in here because of this. Heavy volumes like that at low of the candle in a downtrend usually get tested, like they got tested in here. So that would be the warning for me, and that's why I would quit the trade in here in this footprint. Alright, so that's for this video, guys. I hope you found it helpful. Now again, let me repeat that you don't need to manage your trades like that. You don't need to quit a bad trade like I showed you, because this is really an advanced technique, and if you are new to order flow, I would just use a standard stop loss and not to try to quit your trade at all at break even like this, because most likely if you don't have the experience, this would just make you miss a good winning trade, because you would get scared too soon and you would quit too many potential winners. Alright, so that's my advice on this advanced method. So anyways, that's for this video. Thanks for watching, and I'll see you in the next one.
All right, any questions before I move on?
None here.
All right, what I'm going to do, I don't want to use an example where we have like low volume. So like the week before Christmas, I'm just going to choose like a random date. I want to start on a Monday or whatever, Sunday, I guess. Um, so, again, I'm not really worried about where I start. And I'll explain what I'm going to do. So let's start, I guess, here. So what I'm going to do, or free, what do you trade? MES or ES? And how many contracts do you normally take?
Depends. If I'm confident, too.
All right, I'll just go with 2. I mean, why would you enter a trade when you're not confident? But that's another story. What I'm going to do is basically go week by week. Or I'm going to do my my volume profiles for previous week, previous day, and then we'll look at each day and look for entries. I'm going to do one scenario where we do like a standard, like 10 point stop loss, 20 point take profit. And we're only going to be looking for retests, not retests of retests. So I'm just looking for the first retest. And I won't be looking for a retest of a retest. And basically we'll just tally, how many wins we would book versus how many losses, and if we would have a profitable trading system if we do that. And then I'll also do the same scenario, but I'll actually use like my brain and say, like I would put my stop loss here because of this, or my take profit here because of this, so on and so forth. Right. So I'm going to do both scenarios, like just a standard 10 point stop loss, 20 point take top profit, and then how I would actually trade, which is, to look and figure out where I want to stop out or take profit versus, like what I'm actually seeing on the chart. Hopefully that makes sense. So we could add SIGs and all that stuff to the chart. I'm not going to do all that. I am going to do strong lows, poor highs, poor lows, strong highs, etc.
Do you mean the TPO levels?
Just strong highs, strong lows, poor highs, poor lows. That's it.
Okay.
Or what's it called? Spikes. So single prints at the bottom here, right? And we're just going to literally go day by day. And for me, when I have single prints, I like to enter at the mid. And then my stop loss would be, somewhere below this. If we lose this, like my trade's pretty much invalidated. You would expect a bounce, worst case, at the very bottom. If the single prints are at the top, same thing. I would stop out just above it. But we'll discuss that kind of as we go. But my entry would be the single print mid right there in this case.
How do you find the top of that single print? I'm not understanding. Oh, because it's just one candle?
Yeah.
Okay.
This isn't single prints because there's 2 candles in this area.
Single prints. I know. I would have put the top at where you have the middle of the single.
Why?
I'm trying to figure out how you found the top of the single print. Yeah, that's what I want to know.
Because a single print is where there's only one candle traded in that area. This is 2 candles.
Oh, gotcha. Okay. Got it. Thank you.
I mean, even here we have single prints, but I'm not really looking at single prints in the middle of a trend. Or I mean, in the middle of the day. I look for them at the top and the bottom, but I know Shorty will use these. But for what I'm covering, I'm not worried about that. What I'm looking for is either break above a level, get 3 5-minute candles, retest, enter long. Break below a level, 3 5-minute candles, retest, enter short. Or, my single prints, I'll also trade in that area. And then I have my poor high up here at the top, right? So basically the whole point of this is to uncomplicate things. Like, we shouldn't be using like way too much information until we're comfortable. Like, you should start with digestible pieces. So like, if you're still struggling to trade, you should simplify it and go to just volume profile, poor highs, poor lows, single prints, strong highs, strong lows. At least my opinion. People might disagree with me. And then what I'm going to be looking at for trades, like I said, 10-point stop loss.
I don't disagree.
And 20-point take profit. And that's going to be just like our general trade. But we'll also, again, look at actual setups and figure out, like, whatever, there's a strong high here, I should close the trade here, vice, so on and so forth. So those are the two, like, main setups we're going to be looking at on retests. So I'm just going to be dragging these around as we go. So we'll start playing this forward and just look for our first entry, basically. So far, nothing. And I'm doing it this way. It would be way quicker to just play out the whole day. But I don't want anybody to be like, oh, like, you knew it was going to happen and that's why you put your take profit there and blah, 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 blah. No, I want to go off of actual information, right?
Yeah, this is cool.
Technically, you could argue this was our entry. This was our break above. This is the retest. And actually, we should play that. So this is our first trade here. Also, Shorty would say that was a peak below and bounce, right? So like, we would 100% take this. Is this really 20 points? I'm doing something wrong. No, it's 20 points. I guess I'm not zoomed in enough. I'm like, gosh, this looks crazy. So we would have been in and out of this trade very quickly. I'm going to say this would be our first win, right? Anybody have any objections to that? I don't trade off of POC. But you could argue that this was break below. This is the retest. I'm not even going to consider that. I will use POC as a place to... How is this not the previous day low?
Minute are different.
No, somebody's saying this isn't the previous day low, and I'm...
Maybe they think you're looking at this.
Oh no, I'm doing something wrong. What did I do?
Didn't you do previous week?
I did. But how's my previous day in the middle of nowhere? That doesn't make any sense. I'm so confused.
Does the adjusted contract thing, because you're on ES1, right?
Oh, no. It's because...
And ETH.
No. It's because
ETH.
I turned off ETH. Everything was correct. This is... This is my previous day. Right? And this is, yeah, this is previous day.
Yes. Yes.
Somebody confused the hell out of me. This is 100% my previous day. No, I know I'm on ES1. I'm not worried about contracts, whatever. I mean, we could go to specific contracts. It's not going to change anything. I'm not looking at really old levels. I'm doing previous week and previous day, and that's it, right? And then poor highs, poor lows, strong highs, strong lows, single prints. That's literally
Gotcha.
all the information that I'm using. So based on what we've done so far, we have one win, right? Why is this crazy? And you guys keep me honest because I'll probably lose track. Actually, I'm in a message free. So one win. That way we can keep track of everything, right? Again, this is potentially a short, but I don't take trades off of the POC, so I'm not going to consider it. It would have worked, and I honestly don't give a shit.
May I ask why? Like, what's your personal preference to why
Because
you don't take trades?
I just don't because I don't like they're respected, but not as much as like breaking above a level, like the lower the high. I just use them as an area to close my trades.
I see. Okay.
NAF IB board, I don't really know how to answer your question. Imbalances, you should be like basically, let's just say we have an imbalance created here. You should be waiting for a retest. The next time price comes to here, basically at the top you would enter. So there shouldn't be any waiting for anything as far as confirmation. If you're trading off of imbalances as they're being created, you're gonna get your cheeks clapped. And it sounds like that's what you're doing. Anyway, let's keep playing this forward. So I said I'm not going to play the retest of a retest. If we break below, and get like 3 5-minute candles and then come back above, at that point, I would consider, taking a long. But when we touch here, I'm not going to be getting back in long. Specifically because if we're tapping the level again, it's showing weakness. So right now we broke below, second candle went back above. So this becomes my first candle. This is my second candle. At this point, I'm immediately thinking short, assuming I get a third candle below in a retest, right? I would have got stopped out.
Oof.
Right? So one win, one loss.
But would you have taken it? You didn't get 3 candles.
I thought I did. 1, 2,
One,
3.
two.
Yeah. I did. 1,
Oh.
2, 3.
Oh, I see.
All right, keep going. So now at this point, a retest, I would consider being in long. Right? It doesn't look like they're going to give me a retest. And the first trade, I forgot to do like actual analysis. But so now it would be
Yeah,
long.
I was just going to say, do you have a plan?
So
Like the plan.
yeah, if I was trading this, right, I have a poor high, I think. Let me see. Yeah. This is questionable. It could be a strong. I'm going to say it's a strong high. I have a strong low. So basically, if I want to take this trade, I can put my take profit here or even here, and I would want my stop loss below this wick. So I could do something, again, as long as the risk to reward is there. I don't think it's going to be, though. It's close enough. I'll take this. Okay. So this is based on our, risking 10 to make 20, and this would be trying to make more, risking. I mean, it's not always going to be risking more, but in this case it is, right? So let's see what happens. This one got stopped out, I think. Is it still in? I can't really tell. It looks like, no, it did get stopped. Okay. So our actual numbers are 1 win, 2 losses. I'm not going to be counting based off of this one. But we'll still just kind of see what happens. I feel like at this point, this is what Trader Dale's talking about. At this point here, I should be getting out break even, right? I broke below, I have 3 5-minute candles or more. If we come back to this, it's probably a retest where I should be entering short, which we will do with this. But I'm going to let the other trade, if it plays out, it plays out. I'm going to get stopped out on one of these for sure, right? The only ones that we're counting, though, are the 10-point stop, 20-point take profit. So that worked. This would have failed, right? So now we're 2 wins, 2 losses. Next, if we come to single point print mid, I would want to get in. Frankly, I wouldn't even consider doing the 10 stop, 20-point take profit here, because really you want your stop loss to be below the single prints. But in some cases, like this area is way too wide for my liking, at least. So like I wouldn't be willing to be in a trade. Actually, no, never mind. I take that back. I'm only risking like 13 points. Or no, I'm sorry. I'm risking 24. I'm looking at the P&L. I'm not ever taking a trade where I'm risking 24 points. I mean, I could do like, really small, what's it called? I could do like a really small, like a couple MES or whatever, but I would just rather wait for a setup where I don't feel like I have to risk as much to catch like a massive move. But for the argument of what we're doing, I'm not going to adjust anything. I would take the trade, right? So that's what I'm going to do if we come there. Basically, I'm trying to make this as unbiased as possible. Yeah, so 2 wins, 2 losses, or 3 losses, sorry. And then honestly, like this is an even better entry, right? And with the entry down here at our single prints, we can have a fairly tight stop loss. It seems so weird. Oh, that's right. We are risking 10 points. You can have a fairly tight stop loss looking for, like a much bigger move. This is probably, I mean, it's going to be like a poor high, whatever. But this would be, if we're talking about like our high volume nodes, right? This would be probably where you want to close the trade. If it breaks through, then we come up into this area here. And then you would be considering like the POC. But I mean, nobody's going to like be upset with, 57 points. And I always go a little bit below, like versus trying to hit the previous day low to a T, knock a couple points off just in case we reject right before it. No entry yet. We're in. We got stopped.
Ugh,
So 2
these
wins,
freaks.
4 losses. We're actually break even right now. At this point, I take the single prints off my screen. These have been invalidated, so I'm not looking to trade off of those levels. We're still in Monday. Pretty soon we're going to have to draw our levels for trading on Tuesday, right? I don't think we're going to see any other trades. So for me, I can stop here. I'm not looking to trade the last hour of the market. But we got to get through it. Is this... So we need to go back like one. Oops. There. All right, let's do our daily levels really quick. Pour low, pour high.
RTH again?
Mm-hmm. Yeah, you do TPO on RTH. All right, so now what we want to see is break above previous day value area low, retest, enter long, right? So there's 2 candles above, and we tapped. So now this is not in consideration anymore. Now we might be looking to short if we get 3 candles below. Okay, we might be looking to long again.
Oh, these freaks.
There's 3. So now on a retest here, we would want to be in long. So we're in.
Wow.
Not looking good. And we're out. So this is terrible. 2 wins, 5 losses. This does not normally go like this, but whatever. I mean, this is the reality of trading, right? Even when you're waiting for good setups.
Yeah, this is what we've been doing.
At this point, we're waiting for a retest for short, right? So we're in short. Oh my gosh, really? And we got stopped. Okay. Literally every time I do this, like, the wins far outweigh the losses, but whatever. We'll just keep going.
But normally, sometimes during the day, you say, okay, that's it. I had my losses for the day. And then you go to the next day. You don't keep going, right?
I just take one trade. Sometimes I take 2. Very rarely I'll take 3. But if I get a win, my first trade, I'm done. I walk away. I don't trade anymore. So now we're waiting for a retest for long. So we're in long. Looks like shit again. So this is probably getting stopped out, yeah. 2 wins, 7 losses.
Yeah, but this is not fair because on a normal day you would have stopped already and you'd have gone on to the next day. It
doesn't matter. We're just going off of setups. So again, at this point, I'm looking for short on a retest. This is the reality of trading. Are you going to come back? Nope. Okay. That might be it for today.
Oh, they cleaned up the poor low nicely.
Yeah.
Wow.
Where are we? I'm already on Tuesday. We're almost at the close, right? Okay. All right, cool. Let's just move forward till 1500. I think that's it, right? Oh. All right, let's do our daily levels. So just to be fair, I think I'll just do like 1 week. I would be surprised if the end of 1 week were not profitable, but anything's possible. And but yeah, I would be very surprised if we're not profitable at the end of 1 week. Oh, I forgot to do my TPO stuff. To me, this is kind of iffy. I'm just going to say it's a strong low. But if you told me it's a poor low, I wouldn't argue with you. Why am I confused right now? Where's the open?
RTH.
Yeah, no, I know. This is single prints at the top. Again, it's kind of questionable. Shorty might say it's a crowded high. I wouldn't argue either one. You know, if you told me this is single prints, I'd be like, okay. And if you told me it's a crowded high, I'd be like, yeah, sure. I'm not going to split hairs. All right. Oops, I forgot to go to ETH. So, didn't quite give us an entry there. So this is long. And we're stopped. Nice. All right. This is hilarious. I've done this so many times. I've never had this result. I mean, again, we're not done. It's Wednesday, right? Or Tuesday. Right now, we're looking for an entry short. And we're stopped. This is insane. I wonder, like, what week am I trading? Oh, this is... We had, like, major news in November, right? Oh, well. Right now we're waiting for retest for long. We're long. Yeah, please stop us out. Why in the fuck would you not? That's awesome. This is insane.
I think the government.
2 wins, 10 losses. All right, let's just keep going. No entry here. This would be short. It's crazy. Two wins, 11 losses. Do I always put limits on the levels? What do you mean by limits? Keep going. Wait, what's this single print? This is old, right? And I didn't delete it. It's got to be old. Okay. This would be a retest, I think. Well, yeah. This is a short if they give it to us. So we would be short. And that's a win. Finally. 3 wins, 11 losses. All right, let's keep going. This is actually looking like a diamond top. Not anymore.
Just after hours? What is 18?
No. This is
Okay.
well, depending on
How hard
time
to see.
zones. So we would be looking for a long here. And stopped.
Oh my gosh, it's not fair.
3 wins, 12 losses. Crazy. Yeah, I do use limit orders. Sometimes I use market. I use every kind of order. If I'm waiting for a retest, I'll generally have a limit order there. So at this point, we're looking for a short here. So we're short. That's a win. 4 wins, 12 losses. Let's keep going. So now I want to see 3 candles above and retest. That's 1. This is 2. There's 3. So if they retest this, we would be long. We're long. We're stopped. 4 wins, 13 losses. I have officially picked the worst week in history. Oh, I'm
Yep.
sorry. This is oh no, wait. Like this was Wait, what am I doing? Oh yeah, we haven't even got to the morning yet. Okay. I think this is Tuesday. Okay, yeah, we're still haven't had the open. At this point, we're looking for short here on a retest. So we're short. Wild. Stopped. 4 wins. 14 losses. This is getting comical at this point.
A roller coaster.
It's crazy. Right now, I would be waiting for a retest for long. All right. I feel like I'm getting my days confused. Let me just make sure I'm not. 30-minute. What did I do? Why am I mean, that's part of the problem, and now I would have to start all over again. My levels are completely off. I don't understand how. All right. I don't know what I messed up. I don't want to redo this week. If everybody's okay with it, I'm going to go to a completely different week.
Yeah, I was going to
Anybody have
suggest
a
that. Start
issue with
over.
that? I think I
Can we do
chose...
before the government shut down? Like that was in October. Can we go back to
Sure.
like September?
Well, what I
Okay.
was going to say is I think there was some pretty major news right around November 25th. I don't remember exactly, but I'm wondering if that's what we're dealing with. But, yeah, I mean, we can go back. I don't even care. October.
No, September. October is when the shutdown happened.
Okay. Beginning of September.
Yes.
Let's go September 1st. Well, actually, let's go to Sunday. So, let's go here. I really don't understand what I did. Why my levels were wrong. That was weird.
Well, maybe we should turn off ETH when we're actually trading and only do RTH. Trade
I mean,
during real hours.
I'm fine with that.
Maybe.
I'm fine with that.
Okay.
And the plan is to just do 1 week. All right, 65-minute.
And clear the scoreboard.
Yeah, we'll start over. Okay.
November 19th was Nvidia's earnings. Pretty crazy week. I'm not sure if that was the one you were trading.
It might have been. Let's see. All right. We just need to do our poor highs, poor lows. And I'm going to actually create a rule right now. If my stop loss falls within, doing the 10-point stop loss, if it falls within the single prints, I'm not going to take the trade. My stop loss needs to be outside. Hopefully that makes sense. Meaning that if we come to here and I would get stopped out here, I'm not going to take it. My stop loss needs to be like where we're invalidating the single prints. Looks like a poor low to me. Crowded low. That's what I'm going to go with. All right. Trading on ETH. Oh, we need our... Oops. All right. Let's run it. Why do I feel like nothing happened? Am I crazy? Oh, we gapped down. I mean, this is not going to be helpful. We don't have any levels down here. Oh, well. Oh, we chose a weird week. Like, the market wasn't open on Monday? Okay, I'm over this right now. Let's choose a better week. Sorry. I just want to make this as fair as possible, you know?
Yeah.
And have like a full week, Monday through Friday, without like, you know, holidays and whatever else. So let's just go to the very next week. What are we looking at? Or actually, let's go like, I don't know. This all looks really low, like low volume. Let's go here, whatever this is, Monday. Well, we won't have levels because of this. Sorry, I'm not trying to be like... Okay. I think this is good. So let's go to here. All right, let's do our weeklies. Well, what did I just do? Oh, well. Oh, and I'm doing this on RTH. Okay. Levels didn't move very much. Looks like only the low moved. All right. Am I insane? This is Sunday. Okay. Unbelievable. I don't know what's wrong with me, everybody. What is this random line?
That was your clone when you cloned it, I think.
Oh, I cloned it twice? Weird. Okay, so we should have our replay. Sorry, to here, right? All right. Now we can do our TPO. Looks like poor low and a poor high. Okay. Here's these looking very skinny. Regular trading hours. Let's run it.
You're on 30 minutes.
Awesome. I think we gap, right? Oh, is it still making me play through? Oh no, that's the open. Right now I'd be waiting for a retest here. Wait. Sorry.
That's why it was skinny.
No, but I'm like, I moved the wrong one and then I was confused. All right. Apparently I need to go back to bed. Doesn't look like we're getting a retest. Maybe we will. Absolutely not.
No, it took off.
Me as a trader, I would take the retest of the poor high, but that's not what we're doing, so I'm not going to move anything. Okay. We're long. All right, I'm going to move this over, though. There we go. And we're stopped. One loss. Oh, wait, this is a new day. Sorry. Yeah, I know. This does not. Nobody's entering long with 20 minutes left trying to get a 20-point move. So,
Yeah, that doesn't count. That's why
Yep.
we did RTH.
Yep. So that did not happen. Now we got to go back to here. And I'm not trying to like skew things in our favor, but I'm pretty sure anybody here would agree we're not trying to take a trade with 20 minutes left with a 20-point, take profit. That would definitely be a scalp, and it would not happen. All right. Let's do our levels. And then poor highs, poor lows. We have a poor high. It's equal, so I'm not even going to bother like typing it there, just because it's not going to change anything. If we take a trade there, we're still going to take it regardless. And then we have small amount of single prints here at the bottom. All right, let's play it forward. I would be long here. I think this gets stopped out though, like I'm pretty sure it does. But that's fine. Yeah. So one loss. What's this? And then I don't think we're going to get any other trades on this day. Let's see. And actually, that's better for me. I'd rather do one trade a day anyway. Just so you guys know, as a trader, I would short a retest of single prints from below. This is like, even if we just draw a line like kind of here, this was resistance, gapped over, became support, broken back below. It's going to turn into resistance again, most likely. But that's not something that we talked about trading off of, so I'm not going to count it even if it does work. What day are we on? Still Tuesday. Okay, so now we'll be looking for a long on a retest of previous week value area high, assuming we get 3 5-minute candles above, right? And the reason I'm doing this is I start planning my trade as soon as we break above a level, or as soon as we break below a level. JC, I did get pretty frustrated, honestly. So this is 1, 2, 3. So a retest at this point, I would enter long. I love how this is playing out. We're going to get stopped out again, right? Yep. 0 wins, 2 losses. I'm going to quit my day job. Or, I mean, I'm not going to quit my day job. All right, let's keep going forward. Oh, I just realized we missed one. I don't... we were long, but they broke below here, retested, and went. I don't think it worked, though. Right here. It just looks like another one we would get stopped out on. But let's see. I feel like this is exactly what Trader Dale was talking about in the video we watched. They've invalidated our trade. Basically, you would close break even here and just call it a day. But that's not what we're doing. We're not doing any advanced shenanigans. Oh, and now the market closed and gapped, right? Yep. This was... yeah. I think I realize what I'm doing wrong.
What? It's the reality of the market, the gaps? What?
I think I'm trying to get too much, where I should be doing something like this. Risking 5 to get 10. But we'll keep going.
Okay.
Let me go here. I'm so
Those
confused.
crazy gap things.
I feel like we forgot to move levels, but what? Oh, no. Okay, never mind. I understand what's happening now. It's because we're doing RTH.
ETH for the levels, yeah.
Yeah, and so this is ETH for the night before the market opens. All right, and then pour low, pour high. These we need to erase. This better start going better very quickly, because this is not fun. Retest of previous day value high, I would absolutely take. I would actually take the retest here of the poor low, but it doesn't matter. Would not be surprised to see that act as support. Poor low would have worked. We are actually just not going to have a single trade on this day. What?
What? That was a win, no?
I said I would take it, but that's not something we discussed before. I mean,
Oh.
if you guys want to count it, that's up to you. This I would absolutely take. It's support turn resistance, or resistance turn support. I'll let you guys decide. You want to count it as a win or not?
No.
I say yes.
No and yes.
Just because the PNL thing wasn't there. I'm super OCD, so
I'm good with no. I don't want to skew this in my favor. You know what I'm saying? Like, I don't want to change the rules as we're going. To force things in my favor, if that makes sense. All right, let's go next day.
So let's go next day and put the plan in place before we play it. How's that?
Well, no,
No?
I'm saying when we started this, it was just based off of volume profile. So taking trades off of previous day value area low, previous day value area high, or previous week, whatever, but not we were using poor highs, poor lows, whatever, strong highs, strong lows for areas to close trades, or like knowing that they're going to continue higher.
Okay.
So, oh, that's weird. I marked this poor high as a poor low, and now it's a poor low. That's convenient.
They do that.
No. I'm saying it was a poor high, but I marked it as a poor low, and now it became a poor low.
Oh.
I mislabeled it, and it became what I labeled it as. So this is single prints. Close enough. I would take the single print mid as a short. All right, let's go. So this would be a short.
Where's our plan?
I'm moving it right now. I wasn't expecting them to spike it up so fast. There we go. They're 100% stopping us out. Bastards. That's 0 wins, 3 losses.
I'm just wondering why you would have took that short when you saw that they were going in and up and there were because of the single prints. You're shorting that?
Yeah.
Even at the top?
Why would I not short the top?
Because it's a low volume node and you think they'll go through it.
Where's
This is
a
what I was
low volume
struggling
node?
with. Single prints are low volume node. Okay?
Okay. I don't think you understand how single prints work.
Yeah, this is what I'm trying to say before. Having trouble with the word.
Okay. If price comes up to an area and rejects super hard, that would be a single print, right? A strong rejection of an area. The next time price comes to that level, you would expect a strong rejection of that area. Whereas a poor high is where price keeps hitting it And every time, like, if you look at, let's say this is a door, and I have a battering ram, and I go boom, and I make the door a little bit weaker, boom, make the door a little bit weaker, boom, make the door a little bit weaker, boom, make the door a little bit weaker. Price goes away. What happens the next time I come here? Is this door weak or is it strong? Free?
Yeah, I'm thinking. I don't know. You see that big rejection? It went away from it.
Okay, I'm done.
I mean,
I really just don't know what to say.
weakening.
If a door gets
it's
hit
weakening.
5 times,
I know it's weakening. I know it's weak. It's weak.
Okay.
I get it. So it would go through it. Sorry.
a strong high means that the door was really strong, right? When price came up to it, it got rejected. The next time price comes to that strong door, it's going to reject again. All right, anyway, let's keep going.
Okay, so all those little taps means it wants to go through it.
Yeah.
Okay. And how does that look in single?
What do you mean? A single print is a strong high.
Oh, okay, got it. The strong reject.
This, I think. Wait, did I miss a trade? I did. This was break above retest, right? So I don't think it moved 20 points, but this would be the retest of a retest. And we should be in here. Yeah.
Sorry, my bad.
No, you're good. They're probably going to stop us out, though, but whatever. Let's see what happens. And this is where, like, I would be closing the trade anyway. But I'm not trying to skew things in my favor. Let's just see what happens.
Oof, this is crazy.
Well, we've already rejected from here, right? So, I mean, we are in an uptrend, but I mean, there's a very strong argument to close your trade right here. We're going to end up going into the next day, right? We've got like 30 minutes. If we're in profit, I'm going to call it a win. We would have to close the trade, but we would still have a profitable trade, right? At this point, not very much. Is this the next day? Nope, almost. It's basically break even at the end of the day. So I'm not going to call it a win or a loss. We're just going to have to call it a wash. Let's go delete.
This is very challenging.
Well, what's disappointing here is if we play this back, if we go like this, hang on, what am I looking at? This, wait, is this our initial retest? Yeah, break above, retest, go. If we do this, is this a strong high or a poor high?
Poor high.
So price is going to go higher, right?
Yes.
If we bounce here, we should go higher. So if we're doing like an actual trade, I feel like it probably would have just been better to do this way, but whatever. My stop loss, like you can argue whatever you want. My argument is going to be poor low. If we break below this, like we're probably going lower. I want to give it a tiny bit of breathing room to bounce, and if not, I'll close the trade. I'm risking 4 points. The issue is like how much higher do I expect them to go, right? I don't know if I have any information to the left. Let's look. So right now we're at all-time highs, right? So like I have nothing to go off of up here. I mean, maybe fibs.
I feel like on your lives, you would close at the equal high.
I
for that
would.
one.
That's what I do.
So I definitely would call that a win. Yeah.
So then market at the equal high. I'm good with that. I mean, we're not even counting this as a trade, so it doesn't really matter. But you're 100% correct. I would close it at the equal high because that's how I trade. So if I'm taking this trade and I'm closing here, I'm getting 2.5 to 1 risk to reward, right? And this is exactly how I would take this trade. And like you said, if it was live, this is exactly what I would do, right? So this is my entry, stop loss, take profit, and then you run it and it would have worked. But that's not what we're doing. So I've never not had this work though. This is weird. Where's the end of the day?
Ever since you showed us the replay trading from your lives, I've been doing it a good amount, and it's like arguably more frustrating than real-time trading sometimes.
Yeah, for sure.
But useful though. Yeah.
I mean, the thing is like if we're using a set, 10, 20 point win loss is going to be not as profitable as using like real, like data on the chart and trading off of that. But this is what I chose to do, so I'm going to keep doing it. We're going to do a week, and if it ends up being a loss, whatever, it's a loss. I got to go to ETH. And then RTH. We have some single prints at the bottom. Oh, wait. No, we don't. Sorry. Poor low. Poor high. All right.
Where's your plan?
Well, I haven't got to anywhere yet. This would be a short. We broke below here. This would be the retest. I also would not take this trade though. Whoops. Like if I was doing this live, there's no way. I mean, like, yeah, we should clean up the poor low if they do reject there. But for the range that we're trading in, this is asking for quite a lot. There's my entry. And then this would be my entry long. So that stopped. 0 wins, 3 losses, or 4 losses, sorry. This is insane. So here we broke above. This is our retest. I guess that maybe I'm asking for too much with the 20 point. There it is. 1 win. 4 losses. Where are we at? Okay, and the day's almost over. Okay. 30-minute. I feel like it would be better to run this test using actual, like, levels on the chart, but whatever. At this point, I'm getting pretty exhausted, so...
What do you mean? That's what you're doing, no?
No, I'm just using 10 points, 20 points is what I'm doing.
Oh, yes, yes, I understand.
So like that one trade I did where I said I would put my stop loss here based on this, take profit equal to the poor high, and it worked. That's what I'm talking about.
Yeah, I get it. But you could change that.
No. So weird. Who's ringing my doorbell? Amazon? I don't understand why they ring your doorbell. Like, but okay, whatever. We've got a tiny bit of single prints. And a poor high. All right. Oh, wait, this is Friday.
ET.
No, we've done a full week. Right. So now, this is Monday. It's not a good result. 1 win, 4 losses. This did not play out how I was planning, but whatever, it is what it is. I feel like we should redo this another day, using like...
Yeah, I think so too. Can we do like with the opening type, the value area placement and all that stuff on another day? You know, like when we're setting up for the day. I know not today, but maybe the next time you have time. Can we do this with like where we're opening compared to the previous day? You know, all the stuff that we have been taught in addition to.
Well, I
This
think you're
is
talking about stuff that Shorty does.
the stuff that you do too.
I don't do where we're opening based on the previous day. Shorty does that. Sunday. Monday. I'm curious.
One thing I'll mention about Shorty too is that he has like progressions on. He might have a tendency on something, but then when it passes another level, he'll progress to a different sentiment, so he doesn't stay fixed on it. So don't like forget that, I guess, Free, in the sense of though he may have what happened previous day on opening or close spot, depending on what we do on the current day that we open, he may change.
I'm curious. I
Okay,
want to
thank
do...
you.
Oh, wait, I'm on the wrong time frame. I want to do just 1 day based on how I trade. And see what happens. I'm just going to do Monday. Actually, Monday might be horrible because I really don't have any levels, but whatever.
I feel like the last quarter traded pretty weird, um, just from my opinion. Like you almost had it was only key levels we traded. It wasn't, I guess, only 80%. Like I feel like they worked, but it was just bigger moves. It seemed like we would get our move and then it would just rip or it would chop. It was I found the fourth quarter was tough,
Mm.
just from my opinion.
Yeah, it's been rough.
All right. I just want to see. One day. So, right now, I would be considering short, but we need the 3 5-minute candles. We got them. I don't know if they give us a retest. If they do, let me see what I would actually do. I would have planned this much sooner, but I don't want to waste time planning a trade that's might not even happen, you know. Okay. Poor low. I want my stop a little bit higher than this right here, this candle, the wick. I'm risking quite a bit, but if they give us a retest, this should be nice. Okay. Wow. I got stopped. All right. Let me do the next day.
I think that was a break even. Not sure. This is very challenging.
I don't really understand why this isn't working, because normally it always does, but again, for me it would be one trade a day, and you know I'm gonna enter, or I'm gonna close based on levels, not just a random, you know, like 10-point stop loss, 20-point take profit.